The housing stats are in for May 2024 for the Tennessee Valley. What did prices do? What did inventory do? But before we jump into that, make sure you hit subscribe below to stay on top of all of the latest Huntsville, Alabama real estate news. Let's first jump into the Huntsville market. The average sales price actually stayed flat year over year at $387,000, which is south of the national average. National average is coming in around $430,000 to $440,000. So Huntsville is more affordable than the rest of the country. Also had an increase in terms of the number of homes sold, an 8.7% increase, 723 homes sold versus 618 homes sold last year. Big story, however, for Huntsville is that there's been an increase on the number of homes on the market, a whopping 48.4% increase. 2167 homes on the market versus 1460 this time last year. And if you look at all the Tennessee Valley, there's actually an additional 800 homes on the market year over year. Now let's jump into the Athens market. The big story really is the Athens market. As the average sales price is up $16,000, up to $382,000 versus $366 this time last year. So Athens is almost the same average sales price as Huntsville, just with the great schools that they're building out there and all the infrastructure around the Athens market. It's a really hot market and close proximity, close drive to the Huntsville area. A lot of people kind of consider this the new Madison. So Madison is almost landlocked and doesn't have a lot of room to build. However, Athens still has a lot of area for new construction and building to continue to thrive, which is why Athens is doing so well right now. However, there was a decrease in terms of the number of homes sold. This was just a year over year thing. Overall, homes being sold in the Athens area is still staying steady, but it was a 15.3% decrease year over year. 228 homes sold last year versus 180 homes sold this May. Same story with Athens, a big increase in terms of the number of homes on the market, 56.2% increase. 367 homes versus 219. As with Huntsville and really all across the Tennessee Valley, this increase in homes, really 800 across the entire area, is a good thing as we're now kind of back to pre-pandemic numbers in terms of the supply in the marketplace. Now on to Morgan County. Morgan County continues to be strong. Average sales prices up $10,000 year over year, up to $271,000 versus $261 last May. Also an increase in terms of the number of homes sold. 143 homes sold in May of 2024 versus 124 sold last year. That's a 17.3% increase. Also a huge increase in terms of new homes on the market, 67.6% increase year over year, 310 homes versus 167, as more and more buyers are flocking to affordability, and they're finding that in the Morgan County area with the average sales price south of $300,000, which really is a good sweet spot for the housing affordability index and just with where our median household income is for the Huntsville market. So overall, new listings and just overall inventory is the big story here. We are up in new listings, 1621 versus 1419 this time last year. That's up 14.2%. And a lot of that has to do with people are just literally kind of fed up with waiting on the Fed to move interest rates. We don't know when that timing is going to be. And really they're talking about if it does happen at all this year, it's just going to be one rate decrease, which really isn't going to play a huge impact likely on 30-year or 15-year rates. That's more of just a sign to the overall economy and businesses that they are done raising rates. And so really, I think people are just, again, looking to move on with their lives. As life events continue to happen, they're done waiting on the Fed and they're putting their home on the market and moving on with their lives. Pending sales is actually down slightly year over year, down 2.8%, 1126 versus 1158, so relatively flat. And really, if you couple that with closed sales being up 6.2%, so we're up 6.2% year over year, 1205 versus 1135. We're down slightly with pending sales. So overall, the market is relatively flat year over year in terms of the number of homes sold. So it looks like right now, nationally, we're on pace to sell about 4 million-ish homes across the US. What's average is more of a 5 million range. And we saw, north of 6 million homes sold in the COVID eras. And so we are down dramatically from where we were. A lot of that's that mortgage rate lockdown effect, but there is now more listings coming available on the market. And with interest rates at some point going to potentially come down and increase buyers in the marketplace, that's where we'll likely get back to that 5 million homes sold. So days on market did increase slightly as well, up from 38 to 41. That's still south of what's considered a normal market. We are getting closer to that normal market. And then the average sales price, this may not seem like a big headline, but increasing 3% with these higher interest rates is a big deal. It's an increase to $348,470 last year to $359,022 this year. And so again, 3% doesn't sound like much, but if you put down just say 10% on a home, a 3% increase is actually a 30% return on your initial down payment. If you were to do a lower down payment loan, which was say like 3%, that's actually doubling your money year over year. The percent of list price has been relatively flat over year. We're down slightly, 98.6% versus 98.4% this year. So basically you look at that number, that's the average negotiation range. The number I really like to see for kind of a balanced and healthy market is 97%. And so we are kind of in between 97 and we were 100 and north of that during the COVID years. So we're getting more negotiations into the marketplace, but we simply need to see more supply in the marketplace to really get that number down to 97%. Another big story, and really the continuing big story, is housing affordability, not only in Huntsville and the Tennessee Valley, but across the country. We are down, last year we were at 94, we're now at 89. The Housing Affordability Index basically means a score of 100 means the median household income can afford the median price range home. So the median household income cannot afford the median price range home in our area, which is why you're seeing areas like Morgan County and some of these outlying counties perform better because people are flocking to affordability. If interest rates do come down, expect that number to get back closer to 100. But again, as we get closer to 100, you're likely going to see a rise in prices as well, which might just be the new normal. We might be south of 100 in the 90 range for quite some time. So I do think that's the new normal. The good news is we're much more affordable than a lot of competitive cities across the country. Good news also for buyers is that supply is up 2.5 months supply this time last year. Basically what that means is if all of the homes, based on the current rate of sales, how long would it take to sell all the existing homes on the marketplace? And this time last year, that was 2.5 months. We are now up to 3.5 months. A good healthy number is 4 to 6 months. That's considered a balanced market, not a buyer's market or a seller's market. Technically being south of 4 months at 3.5 months, we are technically a seller's market. However, it does feel more of a pushing a balanced market with seeing a little bit more inventory in the market and a little bit more negotiations out there. Inventory's up 31.2%. We have almost a little over 800 additional homes to choose from in the marketplace. 2618 was the availability this time last year. We're now up over 3,400, 3,436. You might be thinking, 31.2% inventory, the market's about to crash. No, we're actually just back to kind of pre-pandemic numbers of 2019 numbers. And we're really like half of what we've seen, in decades past. And so we're still not where we need to be inventory wise, but we are definitely improving. Again, as a lot of people are just fed up with the Fed and waiting on interest rates to come down, and they're moving on with their lives and listing additional inventory and their houses on the market to move on to the next stage and chapter of their life.